Let them alone. Part 4.
And he said to them, your day of deliverance has finally arrived. I've done everything that I need to do, but now I need to bring out the joker, the main card that I've always been keeping behind. And so he said to them, get a lamb, kill the lamb, put the blood of the lamb on your doorpost, and when I see the blood, I will pass over. That night, because they obeyed, and I thank God that you are obeying tonight and you are coming into this service.
Check
because they obeyed.
Check the table.
Get the deliverance. But that's not just it. What I like the most is the fact that people just get deliverance, they enjoyed maximal favor. Can you imagine when people know you are leaving the town and you're not coming back, and yet you go and ask them to borrow you stuff and they are willing to borrow you stuff? That tells me that tonight the light will shine forth and somebody is going to enjoy the kind of favor that you have never enjoyed before. So it's really worth welcoming you to this night. And of course, that being so that this is going to be the beginning of the first month of the year. For us in the Redeemed Christian Church of God, this is the first month after the convention, which makes it our first month. We will
Okay, good evening, everyone. My host, kindly confirm you can hear me, sir. Hello, sir.
Yes, we can. Yes, I can hear you.
Very much. I want to sincerely apologize for starting very late. I've been having serious technical issues. I don't know if it's from Zoom. I sincerely apologize. Sorry for keeping you till this time. I just I sorry for keeping you till this time. So we'll just get started. We in our last class we started we began with 3 topics. Okay, we talked about basic ethical issues in taxation. Then we also looked at national tax policy that was introduced in 2017. And I made mention that these two topics were recently added to the new syllabus, which was effective from November 2019. So it's important for us to also touch those areas, not only the calculation. So we'll continue today with returns, assessments, and collection procedures. For returns, assessments, and collection procedures, here we'll be looking at what is expected of what or individuals, for what's expected for companies while filing their returns, how they assess their returns, and the collection procedures by tax authority in what in receiving the tax when taxpayer was remit to the various tax authority, remit to the government through the tax authorities. So let's look at as follows. If you can, sorry, in case it's not very bold, you can zoom your screen so you could see the material clearly. So returns, assessment, and collection procedures. First, we'll be looking at filing of tax returns. What is expected of companies while filing of returns? For every, according to, in accordance with CAMA, every year, all incorporated companies carrying out business in Nigeria, okay, they are required to file with FRS, which is the Federal Land Revenue Service. And to file for tax returns with FRS, 3 important documents are usually what's required. First, we have what we call the self-assessment return in a prescribed form, okay? It's a form that is by the when you walk into any FRS office or meet most of these tax companies, they usually have what we call the self-assessment return form. It's a form where you just fill the details of the company. You can get the important details from your audited account or whichever account you are going to the FRS office with. All right. We have what we call the audited account. The audited account is what? The audited account is the one that's been provided by the auditor of the organization. The audited account includes the statement of financial position, statement of cash flow, okay, statement of profit or loss, statement of changes in equity, okay, and the various notes to the accounts and other information, okay. The auditor's reports too. That's also what's included. Then the third document is the tax and capital allowance computation. So these 3 documents are what's required when every company is filing for tax returns. So once the tax consultant or the person going to FRS office to submit this to file for returns, all you need to do is just open the audited account, get the necessary information, and fill the self-assessment form. That's how it's being done. Then what's the time duration for companies to register for tax? For a new company, if it's a new company, within 6 months of commencement of business, they are expected to register with FIRS for tax purpose. Okay. Then what are the registration requirements and processes? For every company, if it's a new company, okay, a new company is expected to do 2 types of registration, okay. One, we have what we call the income tax registration, and secondly, we have what we call the value added tax registration. If it's a new company, okay, For income tax, their relevant tax authority is FRS. For value-added tax, their tax authority is FRS. So since FRS is the tax authority and we have these two types of what registration, okay, two letters will need to be what prepared by the organization. One, the letter will be for income tax and the second will be for value-added tax, and then they'll submit them together to what FRS since it's the same tax authority. Okay. Then, what for income tax, what are the necessary details what's required? The organization or the tax consultants can write the letter to FRS, okay? The organization, sorry, will write the letter to FRS, applying to what register with FRS for what tax purpose, okay? In the letter must include the name of the company, the registered office of the company, the business address of the company, the precise nature of business. What's the nature of the business carried out by the company? Is it contract? Is it manufacture of goods and manufacture of goods? Okay, ranging of services and so on and so forth. So the nature of business needs to be specified in the registration letter. The date of commencement of business should also be included. What was the date the business commenced? The company commenced what its business, its operations, that will also be what be included. Then the name and address of bankers. The banks, all banks, the banks that the company has accounts with has to be stated there. The address of the banks will also have to be stated there. For instance, we have what Tracy Nigeria Limited. Okay, for Tracy, let's say Tracy as a new company is doing our income tax registration. Okay, then Tracy goes ahead to write the names of the bank. Let's say she has opened an account with First Bank, with UBA, with Zenith Bank. Okay, she writes the three banks and also writes the address of the bank. In addition to that, particulars of major shareholders. So all these details must be in the letter. Aside that, you also need to accompany the letter with other documents, and these documents are one, certificate of incorporation, the one gotten from CAC, that's the certificate of incorporation. Then the memorandum and articles of association will also be included. Photocopies will be attached to the letter. Okay, then Form CAC2 and Form CAC7. So those are the necessary details and documents for income tax registration. Then for value-added tax, what are the details needed? For value-added tax, you just need to fill. There's usually a copy. We have what we call the VAT form 001. Okay, the company goes ahead to fill all the necessary details. Then in addition to that, add certificate of incorporation. That's all that is needed for value-added tax. So with that, the company has registered with the FIRS. Then let's move on from that. Let's look at the time limit for filing tax returns, audited accounts. Okay, what's the time limit? For every new company, it's expected that for every existing company, it's expected that tax returns must be filed after 6 months of the accounting year. Okay, tax returns must be filed after 6 months of the accounting year. But if it's a new company, okay, it's usually within 18 months from the date of incorporation or 6 months after the end of its first accounting period, whichever is earlier. For instance, if it's an existing company, if the accounting period is from July to June every year, okay, let's give a scenario. Tracy Nigeria Limited, the accounting period is from July to June every year, okay. For 2018, the accounts will be from July 2018 to June 2017. So what is expected as beginning from the end of June 2019, from June 2019, July 2019 to 6 months after. Within that period, the company that filed its tax returns with FIRS and submit those 3 documents we mentioned earlier. So within 6 months, After 6 months, if the company does not file its tax returns, then penalty will be what? Will be charged to that company. Okay, so let's move on. What's the time period for which tax is expected to be paid? After submitting your account, your necessary details, sorry, the necessary document to file your tax with FRS, okay, you're expected to pay at least within 2 months of submitting your, because what actually happens here in Nigeria, the system we operate here is called the self-assessment system. When we say self-assessment system, okay, it's a system whereby the taxpayer assesses itself using the information derived in the account of the company. That's what is common here with Nigeria. For instance, we have Tracy Nigeria Limited. Tracy Nigeria Limited employs an accountant who is Mrs. M. Okay, the accountants have access to all the financial information of Tracy Nigeria Limited. At the end of the 2018 account, which is from July 2018, sorry, 2019 account, which is from July 2018 to June 2019. Okay, Mrs. M will prepare a financial statement for the company. Tracy Nigeria Limited will go further to call the auditor of the organization. That one will come in, carry out audit based on the financial statement that has been prepared by Mrs. M. All right. Remember, FRS or the tax authority do not have access to this do not have all the details of this information yet. Okay, so all of this is happening within the company or the organization. All right, then at the end of the audit, let's probably the charter that the company auditing the organization is also the one that carries out tax issues, or is also a tax consultant to the company. That one goes ahead to prepare tax computation and give it to the company. By the time the tax consultant goes to a FRS office, that one will file for tax and present all the information. It is expected that within 2 months, okay, within 2 months you pay if the tax authority, which is FRS, if after submitting all the necessary details and they are satisfied with the income tax that the organization is going to pay, then there will be no issues will be raised. Okay, so it's expected that within 2 months you remit to FRS or latest 14th December of the year of assessment. Okay, and if within that period you are still yet to file returns, penalty will accrue to that company. All right, so let's look at penalty for non-compliance. If taxpayers, in this case the companies, okay, do not comply with this tax law, are there penalties? Yes, there are penalties. What is expected is what the tax law says is that after the 6 months, after the accounting year, and you are yet to remit you are yet to file your tax returns, it is expected that for your penalty for the first month after the 6 months period, you pay a fine of 25,000 naira. And for every month that you fail to file your tax returns, you pay a charge of 5,000 naira. So the first month is 25,000 naira. The month after is 5,000 naira until you file your tax and you file your tax returns and pay the necessary tax towards FIRS. However, there are also cases where the staffs of the organization can be held, but they can be held liable, because our law says that ignorance is not an excuse, right? Okay, ignorance is not an excuse. So if any director, manager, secretary, servant, or agent of a company that is defaulting, okay, as proved guilty, okay, that individual or the a system of tax administration where a taxpayer is granted the right by law to compute his own tax liability. So in the organization, Tracy Nigeria Limited computes his tax liability, right? Submits the necessary document to FRS, pays the tax due. So all of this is done by the what? By the company. So that's what we refer to it as a self-assessment system. So he pays the tax due, files his tax returns with the evidence of payment of tax. Okay. Then the relevant tax authority, which is FRS, they shall accept all tax returns submitted by the taxpayer and carry necessary checks to ensure that all required information have been appropriately entered into the tax returns form. So that's what the self-assessment system. However, there are cases where tax authorities are not satisfied with the information that has been submitted by the company or by the taxpayer. Okay, in this case, an additional assessment can be raised. But let me just concerning your tax computation, okay, by the time the tax authority sees the tax liable of that company, please just confirm you're with me and you're following. Okay, you could probably send a chat. I just want to be sure we are still awake. I know it's been a long day. Okay, we are still awake and we are following the class. You can just drop a chat. So I'll confirm that. Thank you very much. Just let me know if you are following. Okay. Okay, I'll wait your chats. Okay, Mr. Sharon, thank you. You're following. Okay, so thank you very much. Thank you. I really appreciate it. So let's continue. I'm talking about for additional assessment. But before then, I want to mention something. If the tax liability for Tracy Nigeria Limited for a given year is, let's say, 300,000 naira, company income tax for Tracy Nigeria Limited is 300,000 naira. What FRS will do is that it's possible for Tracy Nigeria Limited not to be able to pay that amount at once. Okay, so taxpayers are allowed to pay the amount in full, or they can also pay the amount to tax authorities in installments. Or the maximum number of installments FRS can accept is 6 installments. Before they accept in acceptance of the 6 installments, what is expected is from my example, I said the tax liability is 300,000 naira, right? So if we have to divide 300,000 naira into 6 places, what it means is that Tracy Nigeria Limited intends to pay FRS every installment, let's say every month, in 6 installments for 6 months. So every month, Tracy Nigeria Limited intends to pay 50,000 naira. Okay. Before FRS can approve Tracy Nigeria Limited to pay that amount in installments, while Tracy Nigeria Limited is going to FRS to file for tax returns, she should also have gone to bank to pay for the first installment, which is the first 50,000 naira. Attach the evidence of payment in addition to a letter which will be written to FRS applying for its company income tax to be paid in installments. So before FRS will grant, they want to see the letter, that means which will be put in writing in form of application. In addition to that, they would have seen the evidence of the first installment that has been made before that can then be approved to the taxpayer, which is Tracy Nigeria Limited. Okay, I hope you understand that. Then for additional assessment, what's the additional assessment? How does additional assessment comes in? There are cases where FRS discover or they have the opinion that a company liable to pay tax has not been accessed. Okay, which there are some companies that have been in existence for some years and they are not yet been assessed. They've never filed for tax returns. Okay, there are cases like that, or it has been assessed for an amount which is less than the amount actually chargeable. If actually chargeable, let me use the first scenario. What the first scenario says is that if FRS discovers that a company is liable for tax but it has not been assessed, what will they do? FRS as a tax authority, they are what? They are giving the authority to what? Go to that organization, to that company, and what? And assess them as far back as what? 6 years before that date. Do I come again? They are allowed to go as far back as what? 6 years to start assessing the company from 6 years ago. Let me give you from 6 years ago. Okay, there are some companies that are registered, they are carrying out operations, but they've not registered with FRS. Some may not have registered with FRS, or some may have registered with FRS, but they are not filing their tax returns. Okay, if at any time the tax authorities discovers that, which is FRS, and they go for audit investigation, they go for tax investigation in that organization, they can go as far back as 6 years. Let's say as at the year they discover was 2018. They can go as far back as 6 years to 2020 and start going through the accounts of the organization. They'll assess each of the tax they have to pay for each year to that date. Okay, they can also calculate all their penalties for the 6 years to date, and then give them an assessment. That's what's being done for an organization that has never been assessed, has not been assessed. But there are cases where the organization has been assessed, as the company like Tracy Nigeria Limited submits to FRS. But FRS will now discover that the amount being the information supplied by the organization, okay, is what underestimated. Currently FRS have access to the information of taxpayers, of companies, all right, because of the introduction of the BVN, bank verification number. It makes it easier for them to have a rough estimate of the revenue that is being generated for a company within a given period of time. So what they will do, once you submit those information, they can access it and say, they can from their own end, from all the accounts the company run, they should have a minimum revenue of about 3 million. Let me say 25 million naira. Meanwhile, the document submitted by Tracy Nigeria Limited, the revenue is reading 4 million naira. You can see the difference. The difference is about 21 million naira less of the amount. So FRS seems to find that amount is actually less, is understated compared to what is expected from their own background checks. So what they will do is that they will go ahead and give the company an additional assessment, which means in form of an additional tax, charge you in addition to the amount that you have understated. That's what it means, okay, for additional assessment. So let's move further. The next we'll be looking at is best of judgment assessment. There's what we call the best of judgment. What do we mean by best of judgment? There are two situations. When we say best of judgment assessment, they come in two situations, to just the way in two forms rather, just the way the additional assessment comes in two forms. For best of judgment assessment, there are in two forms. One, where a company files its returns, audited accounts, and tax computation, the tax authority may refuse to assess same if found unsatisfactory, and therefore proceed to determine based on its best of judgment the company's total profits the based on his best of judgment, the company's total profit and raise an assessment thereon accordingly. That's the last example I just gave. VSS Tracy Nigeria Limited submits its account and all files for its returns to FRS, and FRS realizes that Tracy Nigeria Limited has underestimated her revenue, okay, by 21 million naira. In that case, FRS will now go ahead based on their best of judgment, based on the information they've had access to. They will raise what an additional assessment to that what organization. The second case, okay, is where a company has failed to submit a self-assessment return, audited account, and EDC. That's the 3 documents required, okay? Audited account, self-assessment form, okay, and the tax computation. All right. If a company fails to submit this, FRS is of the opinion that it is liable to tax. It may proceed based on its best of judgment to determine the total profits of such a company and raise an assessment accordingly. If they at the end of that period, 6 months have elapsed and a given period has also elapsed, they are yet to get the necessary documents by the company to file for tax. Based on their best of judgment, FRS will give what? They'll assess the company. They'll say, okay, after getting access to the information, okay, the company was able to raise about 1 million as its revenue. They will then determine the total profits, determine the tax liability of the company for that given period, and then give them tax. So a notice is usually sent. They will send a notice to the company directly, notice of assessment. That's what it's called. So let's move further. We have what we call the back duty assessment. So what do we mean by the back duty assessment? Where a taxpayer's representative has committed fraud, okay, either willfully, probably by default, or act of ignorance or neglect, as long as it's in connection with a tax that has been assessed. FRS are empowered to assess such company to additional tax in order to make good any loss attributable to the fraud, willful default, or neglect. Within that period, what it means is that if there's any loss FRS had made as a result of that, the individual, the taxpayer, the representative committing fraud, they will have to give an additional assessment to the organization to make do for the loss that what the relevant tax authority has experienced. Okay. So we have the next we'll be looking at a service of notice of assessment. Remember I mentioned that any additional information probably given as a result of best of judgment that will be sent to the taxpayer. That process is called what we call as notice of assessment. The FRS said sending a notice of assessment to the taxpayer. So FRS shall arrange to serve or send by registered post to any company or person in whose name a company is chargeable a notice of assessment showing 1, amount of total profits. Secondly, the notice of assessment must show the tax payable. The notice of assessment will also show the place at which such tax should be paid. Let me just digress a little. Please, I want you to, while reading this theory course, it's important for you to not just read through because you want to pass, try to also observe, make a good observe important informations, okay, like dates, like due date for payment of various taxes, okay, or when they make mention of documents required or the process required in filing tax and so on and so forth, because these little details can come up in your multi-choice question, which is your section A, your 20 marks. So you can just see a question where they will ask you for list 3 informations that is needed in the service of notice of assessment to a taxpayer. sorry, the three informations included in the service of notice or assessment. You have your options A to D or A to D E, as the case may be, and you see different. One of them will have amount of total profit, taxpayer, the tax payable, and the place at which such tax should be what paid. So if you don't know these details, all you know is just the calculation. To pick the information is likely to be what's difficult. So kindly pay attention to these little, excuse me, details. They are all important. We'll go a step further. The next is what final and conclusive assessment. When we say tax is final and conclusive, what does it mean? Okay, it means that an assessment raised on a company is said to be final and conclusive, where no valid objection or appeal has been lodged against the amount of total profit assessed on a company within the statutory time that has been allowed for that purpose. By the time FRS sends a notice of assessment to the taxpayer, if no objection is raised by the taxpayer or the taxpayer does not appeal, okay, probably the taxpayer informs the tax authority that the amount is likely high and then give the reasons well and appeals to pay a certain amount as tax to FRS. Okay, if none is received by FRS and the tax time that purpose has elapsed, then it means that that assessment given to that taxpayer, the company, is final and conclusive. Okay, or the amount of total profit has been agreed by the taxpayer after his objection has been determined by FRS. If the taxpayer objects and FRS consider it, as long as the total profit has been agreed on, the tax is final and conclusive. The assessment is final and conclusive. So what's the time limit for paying tax? Okay, we mentioned that already. Okay, within 2 months. Okay, but latest the 14th day of 14th December of the year of what assessment. Then assessments raised by FRS. Okay, that's what we also have under assessments raised by FRS. I've explained that previously. Okay, there was a penalty for late payment of tax. Where tax assessed on a company is not paid within the time statutory. And what it means is that if the company already knows the company income tax to pay, okay, and within that period of time, according to the statutory time, and the statutory time elapses, is there a penalty for that? Yes, there's penalty for late payment of tax. What the law says is that what the taxpayer is liable to a penalty of an amount equal to 10% per annum of the amount of tax payable. So the taxpayer will pay 10% of the amount of tax payable. Okay. Then secondly, the interest and the bank lending rate from the date when the tax becomes due until it is paid. So the addition of both will be the penalty that the taxpayer will pay for what? For late payment of what? Tax. Then enforcement procedures. According to the enforcement procedures for taxpayer, where a company has failed to pay any company's income tax assessed on it, the FRS is empowered to either enforce payment or recover the tax or due. So, which means that FRS, they are empowered to they can either enforce payments or they recover the tax due through any of the methods above. They are authorized to distrain on the taxpayer goods, other chattels, bond, or other CBT. So what this means is that they are allowed to seize the taxpayer's goods. If there are other securities, they can go ahead to seize them. Then they can also seize upon land, premises, or places owned by the taxpayer. There are cases where they don't remember tax, you go to the company and then put a seal. They cannot excuse me, put a seal to the premises of the taxpayer, especially in cases where the company has never filed for tax returns. Then we have what we call the tax clearance certificate, which is what TCC, tax clearance certificate. What is a tax clearance certificate? Tax clearance certificate is what is a certificate that is issued by the relevant tax authority. Okay, if it's for individuals, only individuals, taxpayers that are individuals, okay, or taxpayers that are registered as business name. Okay, for them, if when they want to collect their tax clearance certificates, their tax authority will be the State Internal Revenue Service, because they are individuals or they are registered as business name. But for companies, if when they intend to collect their tax clearance certificates, their tax authority will be what? FIRS, which is Federal Inland Revenue Service. So tax clearance certificate is both received by individuals and by companies, but their tax authorities are different. Okay, so what does tax clearance certificate? What does it actually entail? What does it show? What does it mean? The certificate shows the true position of the taxpayer to whom it is issued. Okay, the certificate is issued only upon what application by the taxpayer. So if a taxpayer needs a tax clearance certificate, the taxpayer must go to the relevant tax authority and apply for a tax clearance certificate. The tax clearance certificate shows the true tax position of the payer, if the taxpayer has been remitting his tax till date or not. The tax clearance certificate will show all the necessary details. A tax clearance certificate shall disclose in respect of the last 3 years of assessment. With the example I gave previously in the case of Tracy Nigeria Limited, using the 2018 year, okay, it was 2019 year of assessment, okay. If Tracy Nigeria Limited goes to FRS, because she's a company, the tax authority is FRS, applies for a tax clearance certificate. The tax clearance certificate will show what? It will show a maximum of 3 years, which will be what? 2017, 2018, 2019 details on the tax clearance certificate. I don't know if we have seen a tax clearance certificate. I don't think I have a sample here in this system. I would have probably showed you a looked at, but it's just a simple certificate, okay? So it's until the last 3 years will show what? The tax clearance certificate, the tax clearance TCC number must be there, which is the tax clearance certificate will be on the certificate. The tax office was approving the certificate. Oh, let's say FRS office, VI, I'll take the office, tax office 1, Victoria Island. Okay, so it's the tax office that issued that tax clearance certificate will show there. All right, the date of issue, what day was it TCC issued, the name of the company, the registration number of the company, registered number, the date of incorporation, then the tax identification number, which is the thing. Now, it is mandatory for companies to have what? A tax identification number, especially when they are doing their CAC, when they are doing their registration of business. So thing is now very compulsory. Effective business address is also in the tax clearance certificate. In addition to that, tax clearance certificate, we have the revenue or turnover for each year, accessible profit or loss for each year, total profits for each year, the tax payable for each year, the tax paid, the company income tax receipt number and the dates. Then if there's any outstanding tax, it will also be shown. However, part of the requirements to apply for the tax clearance certificate, you have to ensure you are not owing any tax. So the probability of that is usually very slim. So have tax outstanding. However, it's possible. Sources of income of the company, nature of business, sources of income, and if there's any other comment, then the expiration date of the tax clearance certificate is also stated there. What are the conditions of granting a TCC? There are 4 conditions. 1, the taxes must have been paid up to date, like I mentioned before. That's part of the condition. The relevant tax authority needs to ensure that what, there is no tax due to the company before it can go ahead to issue what, a tax clearance certificate. Secondly, all penalties and interest raised has been what, paid. Okay, all penalties and interest rates have been paid. Then if there are returns have been filed up to date, and then there is no outstanding tax query, tax audit, or tax investigation to that individual or the company who are taxpayers. So those are the four conditions before the tax authority can grant a what, TCC. What are the transactions that a tax clearance certificate can be required? There are lots of transactions, but we just have a few here. Okay, you can see this in your section A, could also come your section B. Okay, tax clearance certificates. The transactions: one, when the application for government loan for industry or business, registration of motor vehicle, application for firearms license. So what it means is that you need a tax clearance certificate to apply for the following. Okay, application for foreign exchange or exchange control permission to remit funds outside Nigeria. Application for registration as a contractor, that's very common. Okay, application for distributorship. Okay, if you intend to hold any public office, okay, you intend to hold any political position or a public office generally, you'll be asked to what, present your tax clearance certificate. There are so many, so many. So what are the procedures to process your what, tax clearance certificate? A tax clearance certificate is a document issued by FRS. Okay, it says the company's tax affairs are in order as at the date of the certificate. A TCC is a very important document which is necessary for various corporate transactions in Nigeria. Therefore, a company that carries out a taxable transaction is eligible to register for issuance of tax clearance certificate. If it's a new company, okay, the procedure required is that you register with FRS for a TIN number, and then you also what, process an issuance of what, tax clearance certificate. But now you need to have your tax clearance certificate, so you just register your TIN with FRS. Okay, then for an existing company, the procedure: payment of income tax and filing of income tax returns. You must have ensured you paid for your income tax and filed unnecessary tax return. Then you apply for tax clearance certificate, then to be processed and issued to the what, existing company. Are there penalties? Yes. A person who, for the purpose of what, obtaining a tax clearance certificate, gives incorrect what, information. What this means is that if any individual gives a tax clearance certificate that is incorrect, okay, or the details, okay, sorry for that. Okay, for penalties, the person, for the purpose of obtaining tax clearance certificate, gives incorrect information, okay, gives an information that is incorrect, or thing affecting his liability to tax, okay, that's one, there's penalty. Or if the person what, gives falsify a tax clearance certificate, because tax clearance certificate is highly what, in demand when it comes to most of these transactions, carrying out most transactions here in Nigeria. Okay, those that are involved in falsifying the document, if they are caught, they are liable to a conviction of what, of a fine not exceeding 200,000, or an imprisonment for a period of what, not exceeding 3 years, or both to be what, will be what, the individual will be liable to what, both offenses. It depends on this, how severe the offense is. What are the problems of tax clearance certificates? Are there problems? Yes, there are. We just have fee here. One, it says the tax authorities sometimes require that taxpayer comply with tax payments to date of application for the certificate. Okay. Then secondly, the certificate often takes a long period to be issued. According to, in theory, it says the tax clearance certificate is given within a maximum period of what, 2 weeks. But in reality, it takes more than what, 2 weeks to get the tax clearance certificate. Thirdly, the authenticity of tax clearance certificates as evidence for tax compliance. The certificates are sometimes issued under questionable circumstances because people are in their need of it and they need it urgently to carry out probably contracts and so on and so forth. They can, because of the pressure, some of them go ahead to falsify such documents and present it. So those are part of the problem of what TCC. And so they know when they apply in writing, okay, they are likely not to get it on time to meet up with the various contracts on transactions that they will need the tax clearance certificate for. All right. So we have a few questions here. I want you to attempt them. Okay. I hope we are reading. I hope we are practicing questions. Okay, please. The exam dates are here and they are near. We're in September already. There's no time to store your notes, please. Just ensure at the end of every class, probably next day, like tomorrow, go through the material again. Attempt more questions. Okay, so we have a few multi-choice questions, about 5 questions. I would like you to attempt them. Okay, the answers are so straightforward. Then we also have open-ended questions. All the answers is what we've discussed already. All right. So we have another topic that we'll be taking. We'll be looking at what company in. We'll be looking at our value added tax. So we'll be looking at value added tax. What's value added tax? VAT. Okay. So what's VAT? VAT is an indirect tax on goods and services. Okay. VAT was actually what? It was introduced into the Nigerian tax system. Okay. And it was effective in the year 1994. It was later amended in 2007. But recently, it was also amended in February 2020. Previously, before 2020, the rate of value-added tax was 5. Excuse me, please. Let me take some water. Okay, sorry for the break. So let's continue. So before February 2020, the previous value-added tax rate was 5%, and value-added tax it's charged on what, goods and services. It's charged on supply of goods, okay, and when those goods and services are also what, being bought, both purchases and what, supply of goods and services. There are three basic characteristics of value-added tax. Okay, the basic characteristics. One, VAT is a consumption tax. Is a what? Consumption tax. The items, the goods and services that value-added tax is charged on, they are usually what? They are on, VAT is charged on items that are consumed. Okay, for goods, when consuming these goods, you have to pay VAT. For services, when you're receiving the services, you have to pay value-added tax. Secondly, VAT is a multi-stage tax. When we say multi-stage tax, it means what? This form of taxation is charged in different stages, more than one stage. For instance, let me give another example. We have Mr. Sheung is a manufacturer. He manufactures goods. He manufactures goods and supplies to a wholesaler. While supplying to a wholesaler, Mr. Sheung will raise invoice for the what? For the wholesaler. Let's call the wholesaler Z. Mr. Sheung will what? Raise an invoice for Z. And while raising an invoice, the amount that he's selling the goods to Z will be stated there. The value-added tax will also be what? Stated there, which will give us everything will give us the total amount payable by Z. By the time Z receives the goods, right, Z will be paying for the goods and at the same time paying value-added tax. Z, who is the wholesaler, why selling to Y, who is a retailer? Okay, we also charge what? We also charge a sales price and also add value-added tax. So by the time Y is paying for the sale, for the total what? The sales value of the what? Of the goods, and at the same time paying value-added tax. So you can see that in this simple example I've given, VAT will be paid twice. So that's what we call it a multi-stage tax. At any point in time, when there is what? Purchase and when there is supply of goods or services, VAT is what? Payable. That's why it's different from what? Withholding tax. Withholding tax is deducted at what? At source. But VAT is what? Deducted is a multi-stage form of what? Tax. Thirdly, VAT is the incidence of VAT is on what? Final consumers. Okay, final consumers are what? Final consumers what? Are with the what? Incidence of value-added tax. Then for the administration of tax of VAT, the tax authority responsible for value-added taxes was FIROS. For VAT, there are goods that are exempted from paying VAT, and at the same time, there are also what? Services that are exempted from paying tax. Please, you should know these goods and services, not only for the purpose of passing your exam, but for the purpose of what? Of being a knowledgeable chartered accountant in making. Okay. So their goods are what? Exempted. What are the what? The goods that are exempted from value-added tax. We have medical and pharmaceutical products. We have basic food items, they are exempted, which means that these items, you don't charge VAT on them. Books and educational materials, they are exempted. Baby foods, they are exempted. Plants, machinery, and goods imported for use in the export processing zone or free trade zone, provided 100% production of such company is for what? Export purpose. Otherwise, if 100% of the production of that company is not for exports, okay, they will not what? The goods will not be what? Exempted from value added tax. Then again, another goods is of plant, machinery, and equipment that is purchased for utilization of gas in what? Downstream petroleum operation. You get to see that in when you're doing petroleum profit tax. That will be in your advanced class when you're taking advanced taxation. Okay. Then the next is what tractors, plugs, and agricultural equipment and implements purchased for agricultural purposes. All exports are exempted from value-added tax. Fertilizers locally produced Fertilizers locally produced, agricultural and veterinary medicine, they are exempted from value added tax. Then let's look at the services. Are there services exempted from VAT? Yes, just the way we also have on goods. What do they include? One, we have medical services, services rendered by microfinance banks and mortgage institutions, they are exempted. Plays, performances conducted by educational institutions as part of learning, they are also what exempted. All exported services are exempted. There are types of value added tax. You have three types of value added tax, but here in Nigeria, or the one, yes, here in Nigeria, the one that is majorly widely used by most countries is the what the consumption variant. But let's start with the first type of value added tax. We have the gross product variant. So I will say the gross product variant. How do they charge value added tax? For the gross product variant, okay, they allow deductions on all purchases of raw materials and components. So VAT will be charged on purchases of raw materials and components. Tax is levied on all sales with no deduction for business input. So if there's any business input by what? By an individual, by a company, value added tax is not what? Is not charged. No deduction is made for capital goods such as plant, machinery, and equipment. For capital goods too, VAT is not charged on them. That's when you're using the gross product variant. The second type of VAT is what? The income tax variant. For income tax variants, okay, deductions are made for what? Purchases of raw materials and components. Then it also allows for depreciation on capital goods. VAT is also what's charged. The economic base of income variance is the net national product. That is the net investment. To get your net investment is your gross investment minus what? Depreciation. So all of that is also what? Tax. Value added tax is also charged on that. Thirdly, we have the what? Consumption variance, which is the most commonly used form of what? Value added tax. In this case, the economic base is equivalent to total private consumption, like the name implies, consumption variance. So the more goods and services are being consumed, that's how value added tax will be charged. However, in this case, deductions are made for all business purchases. Well, as long as they are business purchases, value added tax will be charged. If they are what? Capital assets, value added tax will be charged. Of all the three variants of VAT, the consumption variant is popular and widely used by many countries, including Nigeria. Then let's look at registration for value added tax. I've mentioned that in our last, under our previous topic when we looked at returns, assessment, and collection period. Okay, I made mention that for VAT, we need to register with FRS within what? Within 6 months of commencement of business, submitting a what? VAT letter. But for a taxable person, the same thing applies to, so it's the same thing we have here. The second type of registration for VAT is what? For the one by government ministries as agents of what? The board. Not for VAT is a form of tax that we have those we call agents. They help collect tax on behalf of what? Tax authorities. For instance, all these tax government ministries, parastatals, and so on and so forth. Okay, they have most times most of their supplies are done through contracts. Okay, and before they pay the contractors, they would have deducted withholding tax. Okay, and also they deduct value added tax. The net amount is what they paid to the contractors. So these government parastatals, they act as agents for the relevant tax authority, which is FRS. While they deduct VAT and withholding tax, they must remit towards FRS. Okay, so that's how we say this agent, this government parastatals and ministries, they act as what agents of the board of what revenue service. Okay. Then the third is for what non-resident companies. Their companies are not resident here in Nigeria. Can they register for value-added tax? Yes. How do they carry out their registration? What's the tax? What's the value-added tax act specifies is that any non-resident company that carries on business in Nigeria must register for the purpose of tax to the board. Is to use the address of the person whom which is their was subsisting contracts. So if they have any agents here resident in Nigeria, is the address of the agents that will be what used. Okay, a non-resident company shall include tax in his what invoice, and the person to whom the goods or services are supplied in Nigeria shall remit the tax in the currency of the transaction. For value-added tax and withholding tax, they are usually paid. What's the currency for payment of VAT and withholding tax? They are both paid in the currency of the transaction. If the currency of the transaction carried out is in pounds, the amount, the currency to be paid to FRS will be in pounds. If the currency is in dollar, the amount paid to FRS will be in dollar. Okay, so most times, what in practice, most times these companies use checks to remit. So if it's dollar, the check has to be a dollar check. By the time they go to the bank, let's use a government parastatal, for example. By the time they go to the bank and remit and pay the money to FRS, they'll pay in the currency. CBN will be the one to what, go ahead to work to now pay FRS. They will be the one to do the exchange rate, convert the currency of the transaction to naira and remit and pay towards FRS. That's how it's being done. Okay. Preparation for value added tax account. For VAT, okay, we should have what we call the word VAT account. The VAT account, it has is inclusive of the debit side and the credit side. Okay. We have what we call the what input VAT and the output VAT. VAT is calculated essentially through a system known as credit system. With this system, all VAT on input is deducted from VAT output. When we say VAT, the amount, the VAT payable, okay, the net VAT payable is what paid to the what board. VAT on sales and services are credited to VAT account. So this is our VAT account. I guess you can see it clearly. We have our debit side, we have our credit side. Okay. If there's a what? If there's a sales, if we make any sales, the VAT on the sales will come to our credit side. If we purchase any goods or services, the VAT on our goods or services will be on our debit side. At the end of a month, VAT is paid on a monthly basis now. Okay. So at the end of the month, you have your total debit, you have your total credit. Your output VAT, you total it. Your input VAT, you also will total it. Any net amount is all you now pay towards FIRS. So in this given example, the amount payable to the board is 260,000 naira. Okay, that's how you treat your VAT accounts. In some organizations, they don't do this. They don't usually have a VAT accounts. What they just do, they will just, during a given month, they'll just calculate the total sales that the total revenue the company was generated for that period, and then charge what 7.5%. If it's in 2020, beginning from February 2020, they'll charge 7.5% on the total sales and remit to FRS. But they're expected to have their own VAT accounts, calculate their net input and their net output. Net amount is what is payable towards FIRS. Then we'll have the difference between what? The difference between VAT and withholding tax. Is VAT and withholding tax different? Yes. What are the differences? One, VAT is an indirect tax. Withholding tax is a direct tax. Okay. I think we'll treat withholding tax in our next class by God's grace. All right. Secondly, VAT is imposed on goods and services. Withholding tax is imposed on incomes at sources. For withholding tax, there are different types of income. It could be from rent, it could be from consultancy service, it could be from dividends, and so on and so forth. Withholding tax is charged on what sources of income. VAT is imposed at what's currently 7.5%. Okay, current rate is 7.5%. But for withholding tax, the rate is what dependent on the type of transaction. The type of transaction is what depends. That's how the type of transaction is the type of transaction determines the rates, withholding tax rate that will be what applicable. For VAT is backed by VAT Act 2004, but for withholding tax is backed by a section of what CITA, Company Income Tax Act of what 2004. VAT is governed only by Federal Inland Revenue Service. Withholding tax is governed by what? If it's for individuals, it's by SIRS. If it's for companies, it's by FIRS. For VAT is shared by the three tiers of government. The three tiers of government share value-added tax. So you have the federal government, the state government, and the local government. I try to remember the rate. I think federal government takes 50, is it 50%? Okay, when I remember the rates, I'll let you know, probably in our next class. Okay, the percentages. Okay, federal government has its percentage, state government has its percentage, and local government has its own percentage. So the total VAT is shared in the three tiers of government. For withholding tax is not shared by the three tiers of what government. So those are the differences between VAT and withholding tax. Then for value added tax, are there offenses? Yes. And are there penalties for the offenses? Yes. So we have a few here. Let's just look at the 5 we have here. Okay, first and foremost, if there's any furnishing of false document, furnishing of what false documents, cases where documents have been falsified. Any person who produces, sends, or make use of a document that is false and gives information to FIRS, the person is guilty of an offense and is liable on conviction to a fine of twice the amount under declared. So for it to falsify a document, if the information declared is understated, it will be expected to pay a fine of twice of the amount under declared or under declared and understated this thing. Okay. Secondly is evasion of tax. If there's evasion of value added tax, is it an offense? Yes, it's an offense. What's the penalty? Okay. Upon conviction, the person is liable to a fine of 20,000 or twice the amount of the tax evaded, whichever is greater, or imprisonment for a term not exceeding 3 years. Thirdly, failure to make attribution. If there's failure to make attribution, okay, the individual having done so fails to notify the revenue is liable to a penalty of about 5,000 naira. Fourthly, another offense, if there's a failure to notify change of address, taxpayers are expected to notify the tax authority of a change of address. If there's failure to notify change of address, okay, they are expected to notify within 1 month that the address of the individual company is being changed. If they don't do that, they are liable to pay a penalty. It was previously 5,000 naira, but it has increased to 50,000 naira in the first month and 25,000 naira in subsequent months. So to show you how serious this is, if an organization, an individual changes this address, okay, always ensure you notify tax authority within 1 month that the change occurs, or else you are currently in company is currently liable to pay what 50,000 in the first month and 25,000 in the subsequent months. This information is from the new finance bill of what 2020. Okay, so that's why that rate was changed. Then the fifth offense we have here, failure to issue tax income. A person who fails to issue tax income for goods sold or services rendered is guilty of an offense and liable on conviction to a fine of 50% of the cost of goods or services for which the invoice was not issued. Advantages and disadvantages of value-added tax, okay? One is a reliable source of government revenue. Secondly, it eliminates the narrow scope and cascading effect of the replaced sales tax. Okay, there is also a consumption tax, so it's very easy to collect. Fairness is established because consumers pay the tax in line with their consumption of goods and what services received. Okay, in fact, when you walk into ShopRite and some other shopping malls, all right, the most of the items that are being purchased, VAT would have been included to the cost, to the selling price of the item. So it's mandatory. Like as long as you are buying, consuming such products, such goods, you have to pay value added tax. So it can also be used as a tool of fiscal policy. Once these items can be exempted, tax rates can be changed to achieve specific economic objectives. Are there disadvantages of value-added tax? Yes, so that they want. There's a high cost of administrative costs on the part of the government, okay? Secondly, there's high cost of keeping records by the companies stroke agents. Then there's also injustice in the distribution of the VAT proceeds, corruption on the part of tax officials, okay? Then the problem of inadequate information can make VAT administration ineffective. So those are the disadvantages of value added tax. So that's all we have for value added tax. Okay, we have some questions here. Very simple questions. Very simple questions. So we have objective multi-choice questions. I'd like you to, okay, let's just go through it one after the other. One, which of the services stated below? Tracy, I would like you to also attempt the question. Okay, so you can do what you can attempt the question. Just send the questions via chat. Sorry, your answer via chat. One, which of the services stated below is not exempted from VAT? A, medical services. B, consultancy services. C, services rendered by units, microfinance banks, and mortgage institutions. D, plays and performances conducted by educational institutions as part of learning. E, all exported services. Which of the services stated below is not exempted from VAT? Okay, consultancy services, good one. Secondly, a taxable person is expected to register with FRS for VAT purposes within how many months of commencement of business? Wow, we've mentioned this twice, so I'm expecting your second answer. Expecting your second answer. Within how many months is a new company? 6 months, correct, that's good. Thirdly, one of the following is a demerit of value added tax. Advantage, we just talked about this. One, high administrative cost on the part of the government. Reliable source of government revenue. C, it eliminates the narrow scope and cascading effect of the It eliminates the narrow scope and cascading effect of the Ripley sales what? Repels sales tax. D, it is a consumption tax, hence it is very easy to collect. E, fairness is established because consumers pay the tax in line with their consumption of goods and services rendered. What's the answer to question 3? A, very correct. 4, in carrying out VAT enforcement, VAT inspectors shall visit the premises of the vatable persons to do the following, except deducted as VAT are promptly accounted for. D, to examine method of keeping transaction and offer suggestions where necessary. E, to educate VAT agents on new developments in the system. What do the VAT inspectors do in carrying out VAT? VAT enforcement. Then for 5, what is the timeline for filing monthly VAT with FRS? For FRS, you're expected to file VAT or what? On or before 21st day of the following month. On or before 21st day of the following month. On or before 21st day of the following month, which is for question 5, the answer is D. For question 4, the answer is E. A VAT inspector, while carrying out VAT enforcement, you are not expected to educate VAT agents on for every other thing, information mentioned above were carried out. Okay. So let's look at, we have a simple open-ended question, simple operation here. So we have question 1, Jonathan, a Kudu trading company. Okay, the company has registered for value added tax scheme. The accounting records of the company revision. They gave us the purchases of raw material, transport and traveling, vehicle running and fittings, motor vehicle, audit and accountancy fees, bank charges, okay, miscellaneous expenses, all of these was given to us. Alright. Then we are required, they say require, complete the VAT payable by Jonathan, a Kudu trading company for the year ended 31st December 2013 and give reasons. Ignore penalties and interest as usual. While you have your answer script, when you're given a question, please ensure you put the title of the word requirements. What I ask in this case, you're writing the name of the company, Jonathan, put the trading company. Okay, what are you required to do? Computation of VAT payable. Your presentation should then we'll go ahead and look at our the first is what did they ask us? VAT payable. To get a VAT payable, like it's in our previous that we have what VAT payable. So what's our VAT output? VAT output is what is value added tax charged on sales. Value added charged on sales. Value added charged on sales. amount given to us VAT has been included, the sales of VAT in the money. So the total revenue calculated for ourselves was this amount, but we are supposed to want to remove VAT from it. I hope you understand. Okay, so we have output tax. Please, in case you don't, you're clear, just send me a chat so we're on the same page. Okay. So for the output tax, since value added tax, why it is given to us so if you look at the bookings here, okay, tax 5/105 times the amount 30,400,500. This press your calculator. When you do that, this is what you arrive at. Okay. Then let's look at what input tax. What is input tax? Input tax is goods or services purchases. So that's how we have what 5/105 times 20,140,650. So by the time you bring this forward, you can see our table. We have output VAT, which is turnover. We have input VAT, which is purchases. By the time you net both the total VAT payable to FRS before it hits 188,564. That's the total amount that will be remitted to FRS for the what's giving period. Okay. We have the second example. Okay. So Olabisi Limited is a manufacturing outfit. Is a manufacturing outfit. The manufacturing outfit based in Way, Ogun State. The company sold its vertible products to a wholesaler, Ake Enterprises, for 2 million naira. The wholesaler in turn sold the products to a retailer, Mrs. Ojilade, for 3.5 million, who finally sold to consumers for 4.2 million. Assume there was no closing event at each stage of the transactions required. Compute total VAT payable to FRS. Okay, so these are our second question. So yes, we have our second solution. What's the name of the company? Olabisi Limited. What are we required to do? Computation of VAT payable for the relevant tax year. So this is a simple table. Okay, I have my computation. I have my naira value. I also have what my VAT payable at each stage. So let's take the question from the very beginning. Who is the manufacturer? Olabisi was Limited. So first, one, we have manufacturer. When the manufacturer sold the goods, who did he sell to? Sold to Ake Enterprises. Ake is the what? Wholesaler. How much did he sell the goods for? 2 million naira. So on sales of the goods, right? She VAT on sales and is on purchases. On sales, we are expected to charge VAT. What's the VAT on the total sales? To get the VAT of the total sales is what 5/100 times 2 million naira. The amount is what 100,000. So the VAT payable by what Olabisi Limited is 100,000. Are we together? So secondly, the next person is what the wholesaler. Who is the wholesaler? Ake Enterprises. Ake Enterprises what? Ake Enterprises sold the goods to a retailer known as Mrs. Ojilade. So Ake Enterprises, what's the total sales? 3.5. Now let's calculate the gross VAT for Ojilade. For Ojilade wants to calculate the VAT. How will we calculate it? 5% times 3 was what? 175,000 naira. But before Aki Enterprise will remit to FRS, what will Aki Enterprise do? You what? Remove the VAT that he has paid on purchases. This VAT on sales, remove it from VAT on purchases. What will be the net amount? 75,000 naira. That's what Aki Enterprise will pay to what? FRS. You can see it. The previous VAT paid us 100. So this is 175. 175 minus 100 will give us 75,000. So that's the VAT what Aki Enterprise will pay. Who is the next person? The next individual who purchased, Mrs. Sojelade. So that's the third person who is a what? Retailer. Mrs. Sojelade is finally sold to a final consumer for how much? 4.2. So here we have what? 4.2, which is the total sale. Do we calculate VAT? Yes, calculate VAT on what? This sales value, which will give us what? 5 over 100 times 4.2. That will give us what? 210,000 naira. If you want to calculate the total what? If you want to now calculate the total VAT payable by the retailer, it will become what? 210,000 naira minus 175,000 naira. That's the amount that was payable. So by the time you deduct, you have what? Net payable of what? Net VAT of what? 35,000 naira. So by the time you total the three VATs, the total amount that will be payable to FRS by these three different individuals or companies is what? 210,000 naira. So you can see that's how value added tax is being what? Charged. So with this, we've been able to cover 2 topics today. Won't stop here. We first looked at returns, assessment and collection period, and looked at on value added tax. So if you have any question so far, you can kindly ask your questions. I'll attend to it now. Tracy, I believe you're still with us. Okay. Kindly send your questions, so I'll attend to it. Do you have any questions so far? The topics we've covered today. Do you have any questions? Okay, see your question. You say, why did we use 5 over 105 in the first question? Okay, let me go back to the question. Okay, question 1. If you look at the question itself, okay. The reason why, if you look at the question itself, they told us, they said revenue. They said revenue, VAT inclusive, which means that revenue is sales now. You understand? Sales. The total sales of the company, of Jonathan, for this given period, this total amount given to us, VAT is already included in it. VAT is included in the amount. And if VAT is included, let's say total sales, okay, let's say total sales is a whole sum of total sales in relation to percentage. Total sales is 100%. Okay, that's 100% of this of revenue is total. 100%. Revenue is 100%, which is sales. They are now telling us now that these amounts that we have, this 100%, that this amount we are seeing here now, 30, 400, 500, VAT is included in the money. What's the percentage for VAT? 5%. So it means that this amount we are seeing here is not just 100%. This amount is 105%. This amount is 105% because it's 100% of sales and 5% of value added tax. So it's 105%. So if you want to calculate VAT of 30,400,500 naira, you cannot say 5 over 100 again because the amount we have there is both 100% of sales plus 5% of VAT. So it becomes what? 5 over 105 times the sales value. I don't know if you understand what I'm saying. The same thing applies to the purchases. For purchases, they also told us that VAT was inclusive. So because VAT is inclusive, we have what? 105%. But for the second question here, the amount we are dealing with directly, the sales, they did not tell us VAT was inclusive. That's why we are using 100%. If they had told us VAT was inclusive, we'll be using 105%. But here, they did not mention that VAT was inclusive. And they told us to now calculate the VAT based on the amount. So they told VAT is not inclusive. The difference is that the first question, VAT was inclusive on revenue. VAT is inclusive on purchases. That's why we had 5 over 105. But for the second question, VAT was not inclusive in the total sales value. Are we together? Okay. So let me know if you understand it better now. Just let me know. Okay, you're welcome. You're welcome. So in absence of no other question, I think we can call it a day. I want to thank you specially for your patience while experiencing technical issue. Thank you for waiting till I was able to come online to attend to this class. We really appreciate. Okay, so by God's grace, we'll see in our next class. Have a good night's rest and ensure you study very well. All right, have a good night's rest. Thank you.